guaranteed future increase. So it's a bit niche in a lot of the products that we help clients set up. They can increase their cover by a certain amount based on life events, houses, kids, mortgages, all of these certain life events, pay rises that can increase the cover. Insurance companies actually don't like these features. Boo! I had a chat with one of the product managers the other day, and I asked him, do you like it that your clients are using this, or is it something that you'd prefer clients not to use? And he said, look, from an actuarial point of view, not really, because the unhealthy people are understanding these features because it's the only option to increase it. So we actually don't love it that their policyholders are using it. Hey there, guys. Welcome back to another deep dive episode. So today we are going to be talking about what are some 10 reasons why it's important to engage a financial advisor when you're getting insurance. So today, this is your first episode, Trent. We've got Trent Bacon.
Great to be here.
Hey, Trent, what do you do here at Skye, and what's your role?
I'm our head of advice at Skye, so I look after our advisors to make sure we're delivering the advice we want to do. Everything comes through me, so making sure that our clients are getting the best of the best.
All right, cool. Best of the best. So first thing is, one of the top 10 reasons to get a financial advisor is advisors just cut through the jargon. Talk to me about that.
Yeah, we're able to go through and tell you exactly what matters and what doesn't matter. Getting through that policy details, the PDS documents are often over 100 pages long. You don't really want to read that. Allow us to read that for you, tell you what matters, what doesn't matter, and get through that.
Yeah, there is. Yeah, those PDSs are. I had a phone call today with the client who is looking at claiming, and she was like, "Oh, do I need to read through the PDS?" And I was like, "You're welcome to, but you don't have to, because there is a lot of jargon, a lot of PDSs. They don't use acronyms, but there is quite a lot of jargon in there." So the second thing, financial advisors, they help you understanding your current cover.
Yeah, so your current cover, people often have something through their super fund, or they'll take something out before speaking to an advisor. It's always good to understand what you have first and foremost, because your health may have changed in the last little while, where you may have taken your policy out before. All those health events have happened. You might be covered in those policies where anything new is taken out, where you just cancel your old one, might not be the best thing for you. So understanding what you have first and foremost is key. So then you can build on that. It might be in the best position already. Having that sounding board to tell you what you have currently is good.
Yeah.
If you were to do it on your own, well, you're probably just going to go, perfect. New cost is a lot cheaper compared to my old one. I'm just going to get rid of my old one. But voila, you might not actually be covered for a lot of things that you were in your previous.
Yeah. And talk to me about some of those misconceptions that our clients have, like, when they talk about their existing cover, but they may not have done a deep dive in it. What are some of the things that they feel like they're covered for, but they may not be?
So a lot of it will have no exclusions on your policies, but you may have increased your policies without going through the proper underwriting process. So you may have said no to a lot of things where you probably should have said yes, because some of the forms with the super funds are pretty easy to go through and click no.
Yeah.
Insurer doesn't ask any further questions because you've said no. If you've had an advisor sit through it with you and go, actually, you probably should have said yes, well, maybe you're not actually covered for those things that you thought you should be covered for, and you're paying for something that's not exactly what you think.
Yeah, and there's nothing worse than getting declined at claim time for a non-disclosure. All right, number 3, they can find cover that's tailored for you. So what are you doing as an advisor?
Yeah, so there's many different covers you can take out, and one person that comes through the door could be completely different to the next person, whether that's your age, your occupation, your actual needs, if you've got a family, those sort of things. So one person's need for life cover might be a couple $1 million, next person might actually be zero. So understanding what your need is, along with different features and benefits as well, different waiting periods, tailoring it directly to you rather than just, hey, here's a policy that you could take out, $1 million, plus income protection of $5,000. Cool, that might work for a lot of people, but for the most people, it's going to be wrong at some stage.
And what are some things that you think, like our clients sometimes come and they think, oh, I only need this, but when we go through the numbers and talk about it, and go through the education process, there is a mismatch between, there's some common things that there is a mismatch?
Yeah, the biggest one's probably in permanent disablement. Most people think, cover my debt if I become permanently disabled and everything will be fine. Well, you've got your medical costs that might pop up. This could be extravagant depending on what illness you're going to have that leaves you to be permanently disabled, but also your income through retirement. If you're in your 30s or even your 20s, you've got 40 odd years until you retire. What are you going to live off if it's not just your income protection, which might only cover 50 to 70% of your income? Are you going to be able to survive off just that? Probably not. So we need to be looking at other amounts there to help aid you, especially if you're permanently disabled. If you're a partner, if you're going to rely on your partner's income, what if they can't work? They're now looking after you. You've now got no incomes apart from your income protection, which is 50% of yours. How are we surviving? So considering those sort of things.
Yeah. And there's like, at the end of the day, we will tailor it to our clients, but they pay the premiums. We can always dial it down if they want to just cover that mortgage. We'll just talk to them about, okay, here are the risks that you're taking on. And this is the cost to pass on that risk somewhere else. All right, next thing.
Number 4, the types of policies to get or which to avoid.
Yes, cool. Talk to me about why do I need an advisor to tell me what to avoid?
Yeah, so there's a lot of, let's call them junk policies out there, or policies that aren't going to cover you for everything. So one of them is mortgage insurance. So often when you take out a mortgage with the bank, they'll sell you a product called mortgage insurance, which is really there for the bank rather than you. Often the case is if you pass away, they'll just cover the mortgage with that policy, and it's basically taken on with an insurance company. You're paying usually a relatively high premium for that, but really you don't really get much out of it apart from covering your mortgage. As your mortgage decreases over time, that policy is actually becoming less and less, where if you had a regular life policy in that space, it's probably going to cost you less, and you're actually going to get more money from it, because if your mortgage decreases, your policy still remains higher. You're going to get that higher amount, which could extinguish your mortgage, and then you can keep the difference on top of that, or your family could, because you're probably not with us anymore.
Yeah. And some other things like direct policies that we look at, like, you know, if you've ever chucked a sickie, which I know you haven't, Trent, if we've ever chucked a sickie and you're watching TV during the day, like, you know, there's a lot of ads about like no medicals. Let's get no medicals insurance and all good. Like, what are some of the issues with no medicals?
I do miss watching Ellen DeGeneres like I was at school. Ellen DeGeneres, Ready, Steady, Cook, and a bit of Koshy.
I was just thinking, you know, my daughter, when she had a sick day the other day, and I was like, she's just going to be watching Netflix, if anything. Like, they don't get the crappy ads of daytime TV.
It used to be it's 9 a.m. to 10 a.m. when the kids' channel was still on. It was all time, and then you're stuck with Judge Judy, Ready, Steady, Cook, and the garbage. Yeah. So was it worth it? Probably not half the time. So what we're looking at there is a lot of the insurances sold through, say, a Sunrise that do the advertisements there don't have medicals involved, but they do all the medicals at the end. So you go to make a claim, they'll do the medicals and go, well, you're actually more sick than what we thought you would be, or what would be willing to cover you for. So we're not going to pay you out. We're actually just going to pay your premiums back.
Yeah, or just prove that, you know, there's an inbuilt pre-existing condition. So, you know, if at the time of claim, they'll say, okay, prove that you didn't have this existing condition prior to signing up for this policy. And you just don't want to go through that whole process and rigmarole when you're needing the money. Okay, so number 5 is about talking about advisors help choose a policy prior to applying. So obviously we've got to choose an insurance company, but why do we do a lot of the pre-assessments prior to making a choice on the insurer?
Yeah, so if you wanted to figure out what insurance company is going to cover you for without going through every single application, which could include medicals, different physicals, which is going to be time and effort, you might have to do a tele interview where they give you a call and take half an hour of your time to ask your health. Do you really want to do that 6, 7, 8 times potentially if you go through all the insurers? Probably not. So what often you're able to do is send out some of that information to the insurers beforehand and pick which one's likely to offer you those appropriate terms, and make that decision there. There might be an insurance company that says your occupation is high risk. We're going to limit your benefit to 5 years, where other insurers will say we're okay with an age 65 benefit. And you can make that decision there rather than going through the application, wasting yours and the insurer's time, and then going, well, actually, I wanted something else, and I know that insurer might do it, and then going and starting that process again.
We get a lot of that with clients. They've gone through their super fund and increased their cover, and then they've come back and said, oh, I got an exclusion for my back or mental health or whatever the case may be. And they've gone through the whole process and then find out what the terms are likely to be. But the way we do it is we do that assessment and you know, pre-assessment, and then we can go, okay, one insurer who is the insurer who's covering the super fund, yes, they're going to place the same exclusion, but another insurer isn't going to, because they make a different assessment. And so that's why it's super important to go through an advisor. All right, number 6, halfway through, doing good. Financial advisors offer consumer protection versus going direct or going through general advice.
Yeah, so financial advisors have to take into consideration your personal circumstances, produce an advice document that's going to be in your best interest. There's licensee checks and all sorts of things that go on to make sure that that's in your best interest, not the insurer's or the advisor's best interest as well. There's different channels that if it does go wrong that you can pursue, where a general advice piece or going direct, they're not taking into consideration your own personal circumstances. They're selling you a product and it's up to you to make that decision for you. So it's with you at the end of the day. If you make a mistake, at the end of the day, it's probably going to be bad luck.
Yeah. And that's one thing that, is super important. Consumer protection is incredibly important. Having someone do the due diligence, make a recommendation. If their recommendation isn't in the client's best interest based on today's kind of legislation, then it's inappropriate and therefore there is some remediation if something goes wrong. Yeah, going through general advice, which is like those, comparison websites, they're all general advice. They're not telling you what the best insurer is. Even if you're speaking to someone on the phone, if they give you a warning about, oh, this is general advice only and we can't take any of your personal situation into account, there needs to be a bit of is that what I want? Or do I want someone who can provide me personalized advice that I do have some consumer protections, which obviously we don't like talking about. Like we don't want to get sued. But we do the right thing. We spend a huge amount of time making sure we are acting in our client's best interest because we do know that there is that consumer protections. If we do the wrong thing, then we're liable for it, which is great from a consumer's point of view. So number 7, they can get a better deal with an advisor.
Yeah.
Are we here wheeling and dealing and getting, special rates?
Not often, if ever. But often we have access to different products directly to the insurance company than you're able to get through your super fund or elsewhere, or if you call the insurance company directly. So sometimes the insurers will limit their products and their features that you're able to get. We're potentially able to get a larger suite of products. I know there's at least one insurer that doesn't go direct to market, but also often priced better as well. Going directly to your super fund, we've done a big study on it. I'm sure you could find a link for it on our website and we might post it below. But yeah, often if you go directly to your super fund versus an insurance company, you're going to be paying more for exactly the same thing, or not even exactly the same thing, something that's going to have less features and benefits and you're going to pay more for, versus something with an insurance company has better features and benefits or more appropriate features and benefits. With costs, there's going to be less.
Yeah. And there's a whole bunch of reasons for that. And it doesn't make sense. A super fund's insuring millions of people. Why wouldn't it be cheaper if they're insuring millions of people? And the reason is because the insurance company needs to make one sale every 3 years. So they've got to convince that super fund to buy their products at whatever price that they determine. And a lot of those contracts are actually based on what ancillary benefits that they need to do, how much of the claims processing or the administrative work can the insurance company take off the super fund. So it's sometimes very much in the, super funds have to consider insurance for their members. That's a legal obligation. But a part of those negotiations is we may not be the cheapest for your members, but we will offer you, the super fund, all of these extra benefits. When you're going through a financial advisor, it's an incredibly competitive market. We've got 10 insurers we can choose from, and there's a lot of competition in that space. And so it does mean that it can be priced appropriately. And, as you said, from our research, it's often cheaper because you're getting much more detail. Well, the insurer is getting much more detailed understanding of you as an individual and what's your health history like versus the big group. They're often covering a massive amount of people. In more broad terms, yes, the policies aren't as good, but they've got potentially more unhealthy lives in that pool. So insurance is like just a web of complexity. But number 8, financial advisors, one of the reasons to get insurance through an advisor is they can help you at claim time. Talk to me about that.
Yeah, so you take out insurances, pay all this money, and when it comes to claim time, you want to get some help. It's when you're probably sick, probably unwell, when you're stressed, you don't want to do all this stuff. And often if you're going directly to the insurance company, which we've found out recently, sometimes they'll give you misinformation on if you can make a claim or not. They'll send you all the forms out and say, good luck, send them back when they're done. Where if you're speaking to an advisor, they can go through the PDS for you, tell you if you're eligible for a claim, there might be some extra features or benefits on your policy that you can even make a further claim on, give you that information and help you fill out the forms to make sure that it's a relatively speedy process to take the stress out of it.
Yeah. Yeah, I mean, we help our clients go through claims. There's a number of situations or experiences that we've had. Is this morning had a phone call with someone who had gone directly to the insurance company and was told oh, they can't make a claim. And that's just not the case. Like, this client is potentially, totally and permanently disabled and can make a claim on her TPD. But because she asked the call center person, can I make a claim on income protection? And talked about there was some TAC income, the person on the call center is like, oh, no, you can't. So, there's big issues, and I'm gonna address that directly with the insurance company, as you know, Trent. But like, there are some of those things that may be misinformation, and so having a third party helping you through that claims process, just to advocate for you, is super important. There's plenty of those scenarios, and extra features and benefits. Yeah, we had a client a few years ago claim on breast cancer, and we knew that her income protection had a feature where it paid out 6 months worth of income protection claim as well. She wasn't off work. She didn't actually need the amount of time off work, but that was just an extra benefit that had that client gone to the insurer directly and said, oh, I need a claim on trauma, they would have just helped her with the trauma claim and maybe not paid out that 6 months worth of income protection. So yeah, it's definitely important to go through an advisor or go through an expert during that claims process. So number 9, they keep your cover up to date.
Yeah, so as your life changes, your policy is not going to change unless you do something. So having someone there to speak to, hey, we've had a new child in our family. This is what our life looks like at the moment. Should we change our insurance policy? Is there things we need to increase, decrease? I might not be working. I might be going back to work soon. Whatever that looks like, they can talk you through what those changes need to look like. You might say, I'm going to become a stay-at-home parent and I'm not going to work anymore and I'm not going to do it for the next 15 years. Well, if you've got income protection, it might be worth keeping it for a little while, but when it gets into year 2, 3, 4, 5, maybe you're paying for something that's not actually going to pay you out because you're no longer working, and maybe there's other areas that we need to increase, whether that's your trauma or life cover. So having someone to speak to do that is really good. Otherwise, you're back to the drawing board going directly to an insurance company that, again, point number 2, I think it was, we can check your policy, what you have currently, and go through that process first and foremost.
Yeah, I misspoke a little bit. I said they can keep your cover up to date. I meant to say they can help you keep your cover up to date. As advisors, we can't just like tinker with the numbers and increase the cover willy-nilly. We're going to help our clients, apply for extra cover if we need to. But one specific example is actually like guaranteed future increase. So it's a bit niche in a lot of the products that we help clients set up. They can increase their cover by a certain amount based on life events, houses, kids, mortgages, all of these certain life events, pay rises, that can increase the cover. Insurance companies actually don't like these features. They actually, I had a chat with one of the product managers the other day, and I asked him, do you like it that your clients are using this, or is it something that you'd prefer clients not to use? And he said, look, from an actuarial point of view, not really, because the unhealthy people are understanding these features because it's the only option to increase it. So we actually don't love it that their policyholders are using it. And that's something that I can guarantee 99.99% of our clients have no idea these features are available. But when they reach out to us and say, hey, we've had a kid or we've bought a house or whatever it is, we can say, okay, great, we can increase your cover by X amount based on these guaranteed future increase options that clients have.
So 99% don't currently know, but we are working on making sure they do know. So.
Well, yeah, and also making sure that the insurers get more proactive about encouraging their policyholders as well. So that's one of my biggest things I'm yelling at insurers about, and I yelled at them yesterday as well. Number 10, advisors can advocate for you.
Yeah, so there's a couple of key points to be advocating for. The first one is around putting your policy in force. If an insurer is looking to put an exclusion on your policy because they have the information, your health information, they go, perfect, we're going to exclude that because of different health reasons. If an advisor thinks that that's a bit too far and we could probably get some further information, or it's just a lazy underwrite potentially, they could advocate at that point saying, hey, we don't think it's necessary because of X, Y, and Z, and potentially have that exclusion removed, that loading removed, or even understand when that can be taken off. The other main one is that claim time. So we had one recently where there was a nuanced feature around being permanently disabled or totally disabled in a waiting period for income protection. And I think you said it was 10 days in the first 18 or something.
14 in 21.
Yep.
Yeah.
And they changed it to something more favorable on the new policies, but that feature wasn't passed back to the policy date that she had.
Yeah.
And we were able to advocate for it. And what happened was the client didn't meet the original one that she was assessed for, but did meet the new one, which was more favorable by about a day or two. So we kicked up a bit of a stink and said, hey, can you sort this out and make sure it's paid?
Pretty much, yeah. I mean, it's one of these things when we talk about advocacy, we, as an advice firm, we want to respect insurers and understand that if we are helping insurers pay illegitimate claims, that's bad for my policy, it's bad for your policy, it's bad for all our clients. So we're not going to go and help any fraudulent claims. Like if you're faking your death, Trent, I'm not helping you claim on your death policy. Like,
Unfortunately.
So, yeah, unfortunately. So we're not going to help any fraudulent claims. But if we think on balance, the insurance company should do it, even though the T's and C's may be in their favor where they shouldn't pay out a claim, but we actually think it's in everyone's best interest that they do. And in this case, it was exactly that it was chronic fatigue, didn't meet the waiting period definitions at a period of time, but was just going to be delayed. And so I made a case and had to escalate it pretty high to make a case that it's best for the client, it's best for the insurer on a long-term basis. And, so it's best for everyone in the ecosystem if they pay it out sooner. It did help that we're their number one client as a business, because I was able to escalate it and get on the phone to kind of anyone who would listen to me, basically. So having an advisor advocate for you, because as a policyholder, you are one of millions of policies. They care about all their policyholders, but at the end of the day, if you go kick up a stink and cancel your policy, it doesn't actually have much of an impact. If an advisor and a sizable advice firm kicks up a stink and gets really frustrated, then it may impact, where we place our other clients, because if we feel like they've acted unfairly or unreasonably, well, we may not want any of our clients with them. So there is that kind of commercial reality sometimes. Again, we're not going to do any fraudulent claims, but we can put our thumbs on the scale a little bit. Right, that's good. That's a top 10 reasons. There's many other reasons. I mean, we're obviously pro-advice. We're completely conflicted in our discussions. But talk to me about what are some kind of closing thoughts about why people should go to an advisor?
Yeah, just having a soundboard is a key one. A lot of people know a lot of things, but insurance typically isn't one of them. It's something that people are interested in. It often puts people to sleep. So having someone that can help them out, point them in the right direction and get it right, because it is an important thing. You don't need it until you need it. And if it's wrong at the time of that you really need it, life can change pretty fast. So yeah, making sure you get it right and having an advisor to help you out with that is a major key.
Yeah. Awesome. Well, thanks, Grant. Appreciate your time.
No worries. Thanks for being here.